All right, yeah, let me get this recorded. But yeah, there's a lot of different traders that are on the markets. They all trade differently. And I'm going to have a call for the premium members on the different types of school of traders. And it would help you also with your trading style, because if you understand how other traders and their styles are and what they're looking for, right? You start to now trade with what you call confluence. And trading with confluence is where essentially you can look at the same pattern and understand that there's multiple ways of looking at it. And let's say, like, I know 5 different trading techniques. And if all 5 are kind of telling me the same thing, whether a buy or a sell, then that kind of helps me, with the confluence there. That kind of helps me understand that, hey, from each perspective, from each angle, it's looking like a buy, right? It's looking like a sell. Or if you know that there are people that trade, moving averages. So let me pop a moving average on. People that trade moving averages, maybe the 200, right? 200 period moving average. So if you see that, let's say you don't necessarily trade moving averages, but you pop it on there and see that, hey, look, the price did break above the 200 moving average, which for people that do follow and trade this style, they're gonna flip bullish. And just like with anything, support, resistance, whatever, you kind of wait for it to find support. Well, yeah, this 30 minutes, so it kind of found some support, but we have this little local high to break. But that's just a quick idea for y'all, to understand that, hey, like, you have to create your own trading style overall. For me with crypto, I don't really like to trade it per se, like on the daily. I just wait for nice setups to happen and catch big moves. So I am in a buy right now because we're at our channel. We did break down. I was in this sell for a little bit. I didn't feel that I didn't want y'all to hop into this because there was a lot of instability in the markets. But I do feel assured that this is a great entry for our next pump upwards, right? So overall, I want y'all to take notes of these levels, right? These are some key levels that kind of have to be broken on a larger time frame. Of course, you still have your small time frame levels, like the one we're coming up on right now. If we reject off of this right now, just look for the support at that key level above 48K, right? So knowing where your levels are prior hand is really going to help you. And of course, we're in this upwards channel, so you just trade the channel from bottom to top. So just a quick little synopsis on the Bitcoin trading. I will take a screenshot of this and post it in the chat, just so y'all have the levels for BTC. All right. So one other thing I do want to show y'all with the Fibonacci retracements. So let me actually just go on a 1 minute and I will kind of demonstrate it there. Change the settings on the fibs, right, to this new setting. Hold on. Go from the top down so we can get the support on that retracement. So figured out that the most and heavily used, because I'm not looking to take trades all the time, right? So the best setups are typically when they retrace to the 0.618 level. The 382 is cool as well. But you know, if I'm looking for the continuation type of thing, this is the levels, and of course, you can also change the numbers in these levels. Another level is 0.66. These two levels, you know, if 0.66 get broken, look for 0.618 to have that support. And the way you use it is to kind of find your entry in a, you know, bullish or bearish trend. Okay. So we see we had this huge impulse here. So all I did was take it from the bottom, or from the top to the bottom of this impulse pump. I did it at my line because obviously, and it's going to be subjective, but I did it at my yellow line just as a guide. But it could have been here. Actually, right here looked a little bit better with that. These here are anomalies, right? It's never going to be perfect. And like I said, putting this is subjective to you. So I just did it, you know, at the bottom of this. And what it's used for is for this retracement that you see happening, to kind of find support there. If we don't find support there, then you look for your next levels that you have mapped out, which again, with this, you could pop in the 382, and you know, it's right where I would put my next level at, right? So the fibs are a powerful tool, especially when you're looking for, you know, price targets. You have your entry, and you also have your target. So entry usually at 0.618 or that 0.66, and target at 1.618, right? These extensions help you look for targets before it even happens, especially when the price of the whatever you're looking at is at all-time highs. The reason this comes into play, and look, we're approaching our 6.6, and we're starting to get a bounce off of that. And I did it off the 1 minute just to kind of show you guys it much, you know, faster, you know, as it happens. But I think we're kind of getting that rejection as we speak. But the target is 1.618. Yeah, 1.618. And that corresponds well to my 50K target, because it's always going to be a range, but you always want to take your profit right before where you expect the, you know, resistance to be at, right? Pro traders start to take profits before it actually hit that top. Like you're not going to let the trade go for, you know, 10, 20 pips if you're right there, right? Just take your blues and go about your day. But overall, I wanted to show y'all this on the fibs. Just, you know, really two levels, for sure. And like I said, you can type this in the 0.66, but 0.618 is another, is actually like the magnet pretty much when things are pumping for it to retrace back to, and that's usually where you find your best entries. And then you extend it, usually to 1.618 for your targets. All right, just so y'all have that. So let's look at something else. All right, so here's a funny theory that I have. We might be heading to a bear market like OD with Bitcoin. Like this might have been the top for this run. It like where we're at right now, and this is just my bearish stance on it, like this kind of looks eerily similar to this, right? So we was at 20K back in 2017, it dumped down quickly to 10K, right? 50% correction. Same thing, right? It was at like 65 or whatever, 60, came all the way down to 30. And we had an immediate impulse back up, to as a correction. If we really can't break that 50K level and we get a violent dump, like it might be it. I know that that completely contradicts what I've been saying overall, like 100K Bitcoin, stuff like that. But I just have to look at, I didn't see this. I just have to look at what's happening right now. Like, I mean, I could be hopeful on it hitting 100K or going to a million, whatever. But if it's not actually happening, I'm not going to lie to myself about that. So that's one thing that I'm looking at, is that we had a very similar pattern, that structure that's kind of happening here. Let me actually measure this. So from this low to this pump, 65% on the rebound. And yeah, we're kind of approaching that. Like it's eerily similar, like right where price is right now, that 67% from that rebound. And we're close to that 50K level, right? So be on the lookout for that, especially in Bitcoin. Now, if this happens to Bitcoin, the altcoins will have quick spikes, like 100x quick spikes, because a lot of the money will start to flow into them, and that will be the ultimate altcoin season. But in all honesty, like, this feels mediocre. Like it just feels, I don't know what it is. Like it is insane numbers to talk about, in all honesty, because it took forever for Bitcoin to go from 0 to 20K, right? But we honestly just almost put in 20K, since July, right? Just to think about it in that perspective, that hey, we went from 30 to 50 pretty much in 2 months, when it took like 10 years from 0 to 10 to 20K. I mean, but overall, that's just my bearish stance. I'm not fully bearish at all, until we fully break this channel. Like I said, I posted it in there just so you guys can see my levels. You don't have to really write down all the different levels for real, for real. The ones that are yellow and say key level, I'll make a cleaner version for y'all. This was just my personal one, but just map things out this way. You want to take your buys as close to that bottom of the channel, and have your target set with the fibs. All right, y'all. Let's actually talk, crypto for real, for real. This is shit that I like. Um, I'm gonna need some of y'all to put in the chat, like, who in here does not have a crypto wallet, like, at all? I'm gonna assume everybody does. What the hell is wasabi? Y'all lingo be killing me. All right. So you don't have a wallet at all. Okay. It's a wallet called Wasabi. Never heard of it. Change his address every time. Yeah, it's a couple of wallets that do that. Let me look it up. Wasabi wallet. Let's see what it's about. The source. Okay. Seems like it has some sort of stuff. So it's built in with coin join, Tor integration, coin control, free and open source. I like that. This might be a good find. That's clutch. Appreciate that, Ken. Um, I don't understand what the hell I'm looking at or what the what actually happened. Damn, it does do some crazy shit. Let me look at another one. I don't know why I haven't heard of this though. So we have oh, okay. It basically scrambles your transaction within other transactions. But I feel like, oh, sorry, my bad. She's like, I'm mad confused. So yeah, I'm looking at the blockchain, which is the just list of transactions, and I'm gonna give y'all a full understanding of the blockchain and everything. I have a great section in my course that I'm gonna drop on y'all, just so everybody could be on the same page about it. But I should probably show them a normal transaction because even for me, all right. So this is the thing, like it's like it separates the transaction, scrambles it. Oh, but that's not totally untrackable though, because I mean, you still like I can. All right, so it just looks like it splits the transaction, scrambles it into a new transaction to obviously, do the point oh 0.01. When I click that point oh 0.01, it's included in this block. So the blockchain really is just like, let's say a block, right? Like how you're seeing on this screen would include like 100 transactions or whatever within it. Um, and then all of those get processed at the same time. Think of it like a bus. Wait, no, I wasn't looking at the block. What I told y'all was true, but this isn't the block. I'm actually looking at the address. Okay, I see what it does. So what it does is, as soon as you send a transaction from just what I saw, and I could be totally wrong, and I'll do some more research on this because it seemed cool. It splits the transaction like into two, makes it into like sends it to a brand new address, right? Who then I guess would send it to the end user, but it's like you have to go through a lot to really track this damn transaction. And every time you may want to receive a transaction, it'll give you a brand new address. Yeah, it's like multi wallets within the wallet. Like, so it's not totally, I guess, like anonymous per se, but it does make it a whole lot harder for people to track your transaction. Now, it does say it uses Tor. I want to see in what capacity, because it's sort of like, all right, so there are blockchains where, or cryptos where, just like how you're seeing, and I know I have some new people on here, and just kind of uh, going off about this, but let's go to blockchain.com. And I want y'all to understand, like, oh, shit, I spelled that wrong. I want y'all to understand that it's not, the blockchain is really not anything like really technical or anything like that. Yes, it has cryptographic like security on top of it, but the concept is really simple. Okay. So like imagine if all of us on this call, right? We're good friends. We, we go out every weekend or whatever. And you know how it is when you go out with a group, like, and you want to pay for stuff, or one person pays for everything and then you just cash out everybody, or cash out that person their portion, stuff like that, right? Imagine doing that without actually having to exchange money, or having to send your Apple Pay or whatever to each other. Imagine everyone in here, we just kept a written copy of who owes who what, right? Let's say we each put money in a pot. We each put money into our, let's say, weekend getaway, whatever. Every weekend we go out, whatever. We just put money in there, right? We might each put $100, and um, uh, somebody may want to send somebody some money for whatever reason. And every time that happens, each one of us keeps a record or a copy of that happening, right? I sent $20 to Eugenie. Eugenie then sent 50 to, someone else. Like it's just all of us are keeping a copy of who sent who what and how much does each person have at the end of each day. That's it. That's how, that, the blockchain or whatever kind of works. But obviously there's flaws to what I just stated, right? What happens if we all have different copies, or if I want to be malicious and say, hey, I have more money than I actually have? That's where you introduce what you may hear around in the crypto space, consensus. Okay, consensus, it's just a word. It's just it just means that, hey, like, majority power, right? Voting power, democracy, however you want to look at it. Consensus is just simply the most the copy of the ledger, right? The list of transaction or whatever, the copy that is, I guess, uh, agreed upon by most people in the group, a majority in the group, that will be the copy that will be utilized moving forward. So the copy that I was being malicious with, they'll no longer use, right? And that's how you kind of keep law and order, in a sense, on which copy or version of these transactions are actually correct. But that was just a quick little snippet on what that is. But I'm gonna show y'all, different blockchains. So you go to the Explorer, and somebody got a question, something? You go to the Explorer and you can see all the transactions, for Bitcoin, Ethereum, even DeFi. I guess you can see all the stuff with that. But yeah, let's just go to the Bitcoin one. Every single transaction from the very first Bitcoin being minted is on here. on all these transactions. So you have blocks which are processed roughly every 10 minutes or so. And what they're processed basically by the miners, right? The miners, what they do is individuals or uh, entities, whatever, big corporations, they dedicate processing power to the network, which is Bitcoin, in order to, in a sense, solve like a really hard math problem with their computer. And if they do solve that problem, they will get rewarded with processing all of those transactions that is within the block. You know how each transaction comes with like a transaction fee or whatever? That all of that will go to the miner plus freshly minted Bitcoin, right? Brand new Bitcoin, fresh off the press pretty much. That's how new Bitcoin comes into circulation. And that's what the block reward is. Right now, I believe it's 3.25 BTC. And every 4 year, roughly every 4 years, it gets cut in half. That amount gets cut in half, thus providing more scarcity. So when it first started, it was 50 Bitcoins that you would get when you process a block. Then it got cut down to 25, 12 and a half, continue. And so this here is just how you can track all of that, and you can see all the transactions that are coming through in real time. You can see the amount from who to who. You just don't know who actually owns those accounts. So just to show you guys one of these transactions, now when you see hash, what it simply is, it's hashing is taking regular information, like I could have wrote this transaction, it'll convert it into an alphanumeric string. And when it gets to its destination, it'll descramble to, this transaction or whatever else it was. All right, so that's just a hash on the overall data, right? And that data could simply be this account is sending this account $100 in Bitcoin. That's it. It just gets hashed, so you don't know what's up. So when you pop that open, you'll see all the details. You obviously won't know what it is. You can see the addresses. It seems like this person used SegWit. Yeah, they might have used SegWit, but anyway, yeah, you just see the overall trend, what's happening from who to who. You won't know what's actually happening here, but the transaction is recorded, right? You see what the output was, how much the fees were, etc. You just don't know who actually did that, but all of the transactions are recorded. All right, moving on from that. All right, it seems like a lot of people don't have wallets. So here's what we're gonna do. The easiest wallet you guys can do, if you guys want to, shit, I just lost my, get you guys a Trust wallet. Okay, I forgot to put this in the guide, but I will drop a guide directly about Trust wallet. Go ahead and download this on your Google or Apple phone. Trust wallet is a secure wallet. I'll check out this Wasabi wallet. Who had recommended this? Ken. Is this available like on your phone as well? I guess, yeah, I guess it is. Well, Mac OS. It seems like it's just desktop. So I'll check this out. This does seem pretty cool. So I'll definitely give you guys my take on that. I see we do got a question. What's the difference between this and proof of stake? All right, so the blockchains have nothing to do with how Let me run that back. The way the way that the crypto actually operates or runs or whatever has nothing to do with the recording of the transactions. So they all will look the same in terms of the transactions on the blockchain, just how just basically how those miners or what method those miners have to use to basically process those transactions. That's what the difference of proof of stake and proof of work is. So for Bitcoin, it's proof of work because miners or individuals, whatever, they are their computers, their stuff are actually doing work, right? When I told you about the block, the miner, the miner's computer has to solve this really hard mathematical equation. Essentially, like they will give them a number or something, and basically, remember when I show you guys the hash and stuff, basically your computer has to plug in a number into the hash that would give an output with mad zeros in front of it, or like 36 zeros or something like that. It's a weird little game or whatever, but it's sort of like, hey, what number would make this output? And your computer or whatever device you have, your ASIC miner or whatever, is running through all those different numbers, different possibilities, and whichever one will, comes up with it first, um, they'll submit, hey, this is the actual number. And then the other miners that were working on it, they'll continue to finish their job, obviously. And if they've, verified that it's true, right? If it's confirmed or whatever that is true, then, the rewards will go to that original miner that put it out first. And that it's called proof of work because your machine is doing a lot of work. Proof of stake is just simply you're staking or just placing an amount, a set amount most of the time of crypto into a wallet. You're putting it into something and it's staking. Um, Actually, I don't have that running. But if you guys see this little icon down here, data list, I have some of my Cardano staking on that. And that's and I earn rewards for it. And that's the Cardano wallet for the desktop that, uh, you can just stake your stuff in there. And just by staking it in there, it's just basically the best way to look at it is like for staking, you're putting money away so it's not being traded, thus kind of like, propping the price up in this. I wouldn't say prop the price up. You're just dedicating this amount to the project and making sure that the project is one, decentralized, because you're obviously you don't know the other nodes, or I'm pretty sure you don't know majority of the nodes that are in the project. And also you're putting money behind it like an investment in a sense, and you get rewarded for that. So it's just a different mechanism, a different method of processing transactions on their blockchains. But all blockchains, well, not all blockchains, but blockchain just shows transactions that happen within that ecosystem. Ethereum has a very unique blockchain because Ethereum figured out how to. So, like, if you create a crypto back in the day, you had to create your own blockchain mechanism, the whole system, right? Um, and then include, make sure that it was secure, etc. That cost a lot of money. It cost a lot of, take a lot of time, etc. So Ethereum figured out a way for projects to build on top of it and use its, use Ethereum's blockchain. So now, let's say Chainlink is on top of Ethereum. Chainlink transactions show up on Ethereum's blockchain, right? And every other coin that's on Ethereum shows up on its blockchain. All right. Does that give you a better understanding on the difference?
Yeah, I know that the different blockchains are built on like proof of stake
Mm-hmm.
instead of the traditional hash.
Yeah.
So like, which one would you say is like gonna be like more valuable?
Well, proof of stake, honestly, because everything's moving towards this global renewable energy stuff, whatever.
Yeah,
And the funny thing is, proof of work really doesn't use that much electricity compared to other like industries and everything.
yeah,
So it's just a selling point for people to kind of knock off crypto, especially Bitcoin, because it is proof of work. Um,
hmm
but overall, big money is going into decarbonizing crypto. And I am going to speak on that because the first crypto we'll talk about is Energy Web Token, and that's their specific mission. Is to decarbonize crypto, and the best way to do that is proof of stake. Um,
yes.
I'm just seeing it. I'm not, you know, I'm not for one or the other, just as long as the fees could be low and the shit works.
Uh-huh.
But
No, that's what I've been noticing. It's like people knock crypto, but it works. Like, what else do you want from it? At
yeah,
least it
no,
works.
which is why I'm so adamant in kind of having you guys and anyone else who want to hear to kind of do some research on this because it's not going anywhere.
Yeah, that's what I was
The
trying to tell people. It's people think I'm crazy, and it's like, bro, like you see these Bitcoin ATMs popping up in every convenience store. You're tripping. You don't see it right in front of you.
Yeah,
It's
no,
like it's changing right in front of us at
it's
this point.
fine. Don't go crazy trying to convince the next man to make money. That's all I'm gonna say.
Yeah,
Like,
yeah. I learned that fast.
it'll come a day where it's like, oh, I should have listened. I mean, I get the calls every damn day about people saying, oh, I should have listened, or oh, I did this and that, and they want advice, and I'm just like, yeah, you're not late to the party because we're all still early. Y'all have to look at this
It's been
as
11 years. It's been only been 11 years.
it, yeah. I
You
mean,
know.
you gotta look at it like this is this is like the computers and internet in the 80s, early 90s. Everything is slow and primitive in a sense. And not to fret, like they're going to build on top of that. Things are going to improve. Amazon's first website wasn't what it is today. The shit looked like garbage. Because I
Uh-huh.
remember getting on that website because I had a project to do in school on that damn website. So looking at where they started from to where it is, obviously, and of course, you could look at the bigger trend of technology overall on where we were shit just in 2000 with flip phones and everything to, I mean, to what we have today. So crypto is it's not trying to solve a lot of things at once. It does solve a lot of, like, it can be used as such, right? But you have to understand that all of these ideas are in the primitive stage in terms of development. So you still have a lot of time to get it right. The
Uh-huh.
biggest thing you can do is kind of try to look for those. I mean, I'm all about making that quick money, but just like how, I mean, I don't know how often you guys study like the history of like stock market crashes or things like that, but the dot com bubble was the second most recent crash we can kind of refer to. And for you guys that don't know, literally because of the boom of the internet around 2000, companies were literally getting a website and their stocks would just shoot up in the sky.
Yep.
Some would put .com in their name, and just because of that, they try to claim that they were an internet company. And it wasn't until the actual internet companies, which who we know today, the household ones, the Amazons and the Googles, right,
Hmm.
that actually built the infrastructure that was needed. Those were the ones that was the cream that rose to the top. And that's what I'm trying to focus on in the crypto space. Everything else, I mean, you can make money from, you can make money off of like potatoes. You can trade potatoes. You could trade
Yeah.
corn. Like all of that can be traded and you make money from it. And that's fine, but I'm looking for longevity and development primarily. And so we'll
Yeah,
get to that.
you told us once look into the technology behind it.
Yes.
Like really understand the technology behind it, and then base your decisions on stuff like that instead of.
Yeah, that's totally correct. I know a lot of, it seems like he might have fell off, but some of you guys, I mean, that might still have jobs or was in jobs, was doing like 401ks and stuff, where a little bit of money would go into an account and it was just being traded on the market for you. Um, Take your time with crypto. Like, take your time to research a project because price wise, you can, yes, like early into a project when it's at pennies or whatever might be obviously a great entry, but a great entry to a shitty project doesn't matter if it's a shitty project and it goes down. So take your time and do some research. You can invest little by little, which is dollar cost averaging. You just put little by little, just like how you would on your 401k, whatever. And that will grow over time. That's all you have to do to really make a lot of money in crypto. Chasing pumps, there's a couple reasons why chasing pumps don't really work. One of the main reasons is manipulation. It'll pump and you'll be up 1,000%. By the time you send that to an exchange to then convert it to whatever, one, the exchange probably not even allowing you to deposit onto it. So you're not even able to, get your money unless you already had it on the platform. And two, um, you may not even get the price, right? The exit that you want, because by the time you send it over and you over here looking at your phone and refreshing to see if it made it over to the next address, think people are already taking profits and it's pulling back. So overall, like that's more of a headache than buying a solid project consistently over time and knowing that, hey, week by week, day by day, month by month, like the price is going up and I'm adding more to my position. So let's get back to it. For everyone on here that don't have a wallet, get you a Trust wallet. Download that on the app, okay, on your app store, whatever. And when you do so, follow the on-screen guide. You will create a brand new wallet, but make sure you have pen and paper ready, or at the very least, your notes on your iPhone, right? The Notes app, because you're going to receive 12 words, and these words are your recovery phrases. Okay. These 12 words are the only way you can recover your account in the case of your phone being lost or You know, somebody stealing it, or it broke, or whatever the reason. Um, Having those words will help you retrieve your account on any device anywhere in the world. Having those words are the only way you can retrieve your account. Meaning, if you do lose your phone and you don't have your words, your crypto is just stuck in that wallet and will never be spent, moved, anything. It's just lost. That's the nature of crypto. Okay. So you want to be safe, but you want to be more responsible with your stuff in crypto. There's no one you can call to recover your money. So you are your own bank, and by being your own bank, it comes with a lot of responsibilities. I typically recommend writing down your words and then laminating them. Get yourself a fire safe and waterproof safe, and put them in there. Capiche? You're done with everything. Um, so download that. Make sure you write down your words, save them somewhere, and you'll be good. Just follow the on-screen thing. You guys are smart. I'm not gonna baby y'all through this. It's just like any other app. Just read everything on screen, and you'll understand what's going on. Just wanted to let you guys know about the words. Now, speaking of the words, this is a common practice for you to get your recovery phrases whenever you truly and fully own that wallet and the cryptos that lie within that wallet. Okay. So anytime that you have an app that holds crypto for you and you didn't get any 12 words, you don't actually own that crypto. Yes, it's in your custody, meaning like you can pop open your, let's say your Cash App, right? And you see it's $100 worth of Bitcoin in there, and you could send that to someone. Cool. You don't want to trust that, you know, or you don't want to trust that overall, because that is someone else that owns your crypto. And if they want to be malicious, or if they get caught up in like a SEC shakedown or an audit or whatever, that is your money that will be wrapped up in all of that. And you won't be able to withdraw anything within those periods. So you always want to have full control of your crypto as much as possible. Now, there are always circumstances where you might leave your crypto on an exchange, or you might have some crypto on a platform. Maybe you're taking out a loan against your crypto, and you have it on, let's say, Nexo, which is a platform that I actually use to take out loans or whatever. The reason I even use Nexo is because it gives you the same protection that you have in your bank account, up to $250,000 worth of insurance. So I don't have big money on there or anything like that. Just took out a small loan against my crypto for actually a crypto project. So overall, like it comes with its use cases, right? But you always want to lean on the side of, hey, I want my crypto in my own wallet. And primarily because it gives you the option and flexibility to send that crypto to one exchange or the other if one of them is not allowing deposits of that crypto because things are pumping, right? Having your money in your own pocket versus it being in the bank is different. I can access that money in my pocket right away versus me having to go to the bank. And if we're in a crisis or whatever, I may not even be able to get that money out of the bank. Okay. And honestly, if it's a large amount, they won't even have it for you on hand. Because shoot, just seen a video of this one dude that I follow on IG try to take out 100K from the bank, and they told him he had to come back in like 5 days so they could get the money. Just 100K and shit. Just 100K. So overall, like there's a lot of benefits to you owning your own crypto and storing it properly. The recommendation that I have in the guide is for you to get a Ledger wallet. But in the time being, you can get one of these wallets, a Trust wallet. Make one on MetaMask is another one. You can download this as a extension for your browser, and you'll be able to automatically connect to different stuff. Now, the benefits of having these wallets too, aside from ownership, is that you can now connect to different decentralized apps. Okay, so decentralized apps, there's various ones. The primary ones are when you want to buy certain cryptos that live on a decentralized platform, like let's say Uniswap. Okay, so with Uniswap, this, these decentralized exchanges, there's no middle company, there's no middleman. In fact, you have to connect your wallet, and you see that it offers different options for your wallets. You actually connect your wallet to the interface, right? So think of it like pairing a Bluetooth or whatever. It reads what coins you have in your wallet. And then from there, you can make the swaps, that you want to make to buy whatever other crypto. 10 set, it's about to be one net. Actually, I might get some right now. Let's do one. So actually, I might not, depending on what the fee's looking like. And I don't know if I even have any money in this. Okay, 0.03 ETH, not bad, but I don't know what the fee's like. So as you can see, like all I did was connect my MetaMask wallet. If you guys, for those using Trust Wallet, you'll do wallet connect, and it'll connect to your Trust Wallet. I'll give a tutorial on that exactly, but it's able to read how much Ethereum I have in there. Let's say I selected max to purchase. There's not enough liquidity. What that means is there's just not enough of this token within the Uniswap interface, that protocol, in order to make that trade for me. It said I can try it with V2. It seems like there is some on V2. So there's different versions of them. Things get upgraded. And so that's another reason why you can connect directly to these protocols like Uniswap or Aave or Compound, these different DeFi protocols to go ahead and do some cool things with your money. And I'm gonna show you guys that. Let me see what the fee's looking like. All right, so essentially what I'm doing, swapping ETH for 10 set, and it shows you everything. Shows you the liquidity provider's fee. And what this means is you yourself, like for example, I can purchase this 10 set right now, and then you see up here where it says pool, I can basically stake or pool my 10 set into the 10 set pool. So when other people want to buy and trade, 10 set for ETH, they'll be able to do so, and I'll be able to earn a bit of that percentage, a bit of that fee. You got a question? You want to mute first?
Yeah, it's like adding liquidity. I was following the Sora project, and that's a big part of it for farming PSwap is staking certain tokens together and adding liquidity. So it just, I guess what I'm trying to say is it just builds the amount of money available just to be taken out for people, the liquidity of the money.
Yeah, so essentially, there was an example that I did use with this. I'm gonna mute you real quick, but this is how it essentially works. Because there's no middle company for these protocols, you rely on other people to pull their money together, right? Let's say we had Mexican pesos and the US dollar, right? They get traded back and forth for each other. People might sell the peso for dollars and vice versa. So whenever you're pooling, right, these interfaces rely on, people like myself, yourself, to put 50% of one token and 50% of the other token, an equal amount, right? So if I had $100 worth of Ethereum, I'm gonna put down $100 worth of Ethereum and $100 worth of Tencent, right? For the example that I was just using. And it just, and overall, right, that $200 in total, that will give me a certain percentage of the overall pool. So when the pool earns fees, I will get my respective percentage. And so this is done because there is no middleman, and because it is a decentralized protocol, and it's decentralized because I don't know the next man that's putting their crypto into this, and we don't have to trust a middle company or even each other for this to actually work. All we have to do is support the project by obviously pooling different tokens within it, because the very existence of these projects is dependent on people pooling tokens within these projects. Of course, these crypto projects themselves, they will pool a large chunk of their project, of their tokens on different decentralized platforms, but that's not necessarily good overall because they own a large chunk of that pool, right? So you need multiple people to kind of, like, the more decentralized things are, right, the less control that one person has over things, the better it is. Now you're not worried about somebody doing a rug pull. You're not worried about trusting anyone. You just trust the protocol, trust the code. That's why audits and everything are crucial. That's why you focus on the tech, because the people don't really matter per se. I mean, they do matter in terms of the people putting it together, obviously, but focus on those that are putting that tech together. But like I said, you'll put your stuff together. And I do remember the example I was using. Here's two examples. You want to buy, let's say, some AirPods, right? You could go to Best Buy and pick them up, right? Central company, they have AirPods, whatever. You can make that purchase and it's at a consistent price. Um, or you can go to OfferUp and see who is selling AirPods in your neighborhood. And from there, you'll get a variety of prices. But it's not a central company, and each person don't necessarily know each other. Around the neighborhood that are selling AirPods on OfferUp. Now, OfferUp is that pool in a sense, right? OfferUp offered a place for decentralized individuals, right? People that don't know each other, to place their item and have it be traded, obviously for US dollars, within one platform, right? So OfferUp is dependent on people posting on there that they have to sell something, just like Uniswap is dependent on other people posting tokens or pooling tokens and earning rewards for that, obviously, in order for there to be liquidity, right? Available tokens for regular people like me and you to go ahead and pick up these tokens. Okay. I hope that kind of give you guys a better understanding on these protocols. But it all ties back to having a proper wallet that can connect to it. And again, too, this helps you understand the difference between a centralized exchange, which is an exchange that has a company in the middle, there's a CEO, et cetera, and a decentralized exchange, which is just a interface that connects to your wallet, and depending on people to pull, certain coins and different coins, so it can be available for trading and swapping, for everyone else. On one side, the centralized exchange, when you purchase your tokens from there, they do put it in a wallet for you, but you do not have ownership of that crypto, really, like in technical terms. Yeah, you do not have proper ownership of that crypto. In a decentralized way, which is actually the intended way for crypto to be exchanged, was in a decentralized manner. When you read the Bitcoin white paper, um, the decentralized platform is just an interface that connects to your wallet. All of your crypto is still safe in your wallet until you're looking to make that swap. And when you're looking to make that swap, it'll, take it from your wallet, swap it within the pools, and then put it back into your wallet, and you just carry on. So I prefer this route, but obviously pros and cons to everything. This route with the decentralized size is a lot pricier than the centralized route. When you're making exchanges or whatever, you are taking on the full network fees. Some centralized platforms, they sometimes pay for that fee for you. So, let's say I want to buy this 10 set on here. Actually, I didn't even see what the fee was. Let's do 10 set. I'm do the math. Oh yeah. Let's go to V2 and say swap, confirm swap. So from here, oh, okay. So if you ever get that notice, so slippage, right? That is just when the price is fluctuating between the two assets. So price may be moving too fast that when I originally clicked to purchase this, it may be, outside of that price range. So I might put this on like 3%, honestly, for the slippage. Well, it does have the autos. I don't understand why. Then just, well, no, I don't want it to auto do it. Let's do 3%. Let's see if it'll swap for me. All right, so you see it says waiting for a confirmation, and then this popped up for me to kind of confirm everything. What? Gas fees is $140? Gucci. Yeah, so you get all the details here. I'm obviously reject this, but um, you'll get all the details here. And again, your coins are still in your wallet, and until I actually press to confirm or reject, nothing will actually, I still have that ownership on this call. Okay, so now you guys know how to properly purchase these tokens that may not be on a centralized platform, or the benefits behind buying it centralized versus decentralized. And I do both. I like to like. I remember beginning of this year, I was doing an analysis on just one of my wallets, and I had spent over 1 Ethereum on just fees in like 3 months, and that was from me doing swaps and buying different cryptos, stuff like that. Yeah, using the DeFi stuff, pooling. So it gets pricey, especially with the fees. So I appreciate it when tokens are on a centralized exchange, because I can purchase that token without a swapping fee, whatever. Um, they obviously will have a withdrawal fee, of that token from the platform. But that withdrawal fee is in that native token. It's not in Ethereum. So if I'm buying, let's say, Energy Web token, I'm going to pay the fee in Energy Web token on a centralized exchange. On a decentralized exchange, depending on what platform you're on, you more often than not, you'll be paying it in Ethereum. All right, are gas fees based off the price of ETH burned? No, they are not. Gas fees are just based off of demand and how clogged up how many transactions and clogged up those transactions pools are. The whole ETH burning, you're not going to see a difference in the transaction fees just yet. You are going to get spikes, and things are going to be a little bit more constant, but the what we're experiencing right now is just basically people are offering up more fees so they can get their transactions sent faster, and the miners are obviously prioritizing those transactions. And so overall, it for example, I can send a transaction with no fees or low fees, but it's going to get what you call stuck, where it's always going to get overlooked by the miners because someone else will always offer up more fees, in order to get that transaction to go by faster. So it's just based off of demand. In all honesty, it will come to a point where it becomes deflationary for ETH, but that hasn't been implemented into the main net yet. It's kind of running as a side chain. Like they're gonna integrate it later on down the road. And I'll give you guys more information on EIP 59, but that a lot of people are just thinking that, oh, it's just automatically going to make it cheaper. It honestly just regulates a little bit how the miners charge, or what's a proper charge for those miners. Okay. There was something. Oh yeah, about the withdrawals on here. So each one of these, each project, they're going to have their own. I thought so. I think KuCoin might be having an issue. They're going to have their own small withdrawal fee. In fact, Energy Web token is actually free to withdraw off of KuCoin. I don't know if that was just a fluke or whatever, but I was able to send that over. So that, I bought it on there, and then I immediately withdraw it to my own wallet so I can have custody of it and properly hold it. So that's the benefit of using a centralized exchange. And of course, too, if you're first starting out, you want to buy some crypto, best thing you could do is, easiest thing you could do is sign up for the exchanges that I sent in the packet, connect your wallet, your bank card or your bank account, purchase it with your debit card because you'll get it instantly. And from there, withdraw and send it to your Trust wallet or your Ledger, whatever wallet that you actually have the recovery phrases for, meaning you have the actual right custody to that wallet and no one else. That's the benefit, the no one else part, right? So that's what I really wanted y'all to know, especially my newbies on the wallet side. Let's take a quick look at some cryptos. So Cardano has been doing wonderfully for me. One of my best buys. VeChain as well. one of my best buys. Actually, VeChain has done much better than Cardano from where I entered. But overall, we've seen a lot of new cryptos get a lot of hype, like Solana, Luna. I'm really bullish on Luna because their ecosystem, Luna is pretty much like a Polkadot in a sense. Their ecosystem is vast, several projects in there trying to do different things from DeFi to from DeFi to lending and just everything in between. NFTs, like NFTs is just such a hype right now. It's not even funny. So even XRP is seeing this pump because they're getting into NFTs and shit like that. Like I've been trading XRP really nicely. Actually, I'm in a buy on XRP right now. That does not mean jump in that buy because I don't know the parameters. But either way, let me pull up my list, just overall list, and I'm gonna just talk about a few of these tokens. A couple of them are very low in terms of market cap. Price doesn't really matter. It's market cap that you have to look at to kind of look at the growth potential of that particular project. For example, Rocket Pool, solid project. Let's pop it open, show y'all what they're about. Next generation of decentralized staking and it's a staking pool for Ethereum 2.0. So when staking comes out with Ethereum, and in order to be a node for Ethereum 2.0 to stake, you need 32 Ethereums. With Rocket Pool, you can do it with fractionals, right? Be able to stake it with the overall pool. So it's a self-regulating network of node operators automatically adjust to match demand. The token is used to maintain optimal capacity by increasing capacity when needed to obviously incentivize node operators to join the Rocket pool, I guess, and decreasing the capacity so no more people join when it gets too crowded. But essentially, they're creating a pool for 2.0 staking. So you can see some guides or whatever about that. But with Rocket Pool, they've seen a nice little price jump because I think I got in at like $4. Whenever you search these things up, get into it, read the little synopsis at the bottom. You can click the markets tab to see where you can purchase it. As you can see, Uniswap, Bancor, Hotbit, Paraswap. So the trust score does kind of help because platforms are kind of shady in a sense. So keep that in mind as well. And if you don't know if something is centralized or decentralized, just click on it, and right underneath the name, it'll tell you centralized or decentralized. So this is decentralized and Hotbit is centralized. Okay. All right, so Rocket Pool, solid project. I've been kind of slowly accumulating, throwing profits into it, stuff like that. Yeah, it was settled at around $3-4 for a while before we got this pump. Nice little pullback around 7, and yeah, we're seeing where things are going from here. So that's the first one y'all could write down. So Polygon, right, formerly known as Matic, solid layer 2 thing for Ethereum. So It's the first well-structured, easy-to-use platform for Ethereum scaling and infrastructure development. Its core component is Polygon SDK, a modular, flexible framework that supports building multiple types of applications. This is basically helping Ethereum do what they do much better, faster, and cheaper. We know that fees are the biggest thing with Ethereum right now. Essentially, all these smaller projects are kind of building out the concept that Ethereum could use. And once Ethereum finds the one that it likes, then it just implements it to its core code. And now, things will be running smoothly or as intended. So Polygon effectively transforms Ethereum into a full-fledged multi-chain system, aka Internet of Blockchains. This multi-chain system is akin to other ones such as Polkadot, Cosmo, Avalanche, etc., with the advantages of Ethereum security, vibrant ecosystem, and openness. So yeah, like it's creating blockchain of blockchains. Interoperability is going to be a huge one. And what interoperability means is just simply all of these blockchains being able to talk to each other, being able to share information, etc. So when you have layer solutions that already have that implemented, it's good to take a look at. And it also mentioned other projects that do the same: Polkadot, Cosmos, Avalanche. Avalanche has been seeing a huge increase this past week. So let's actually take a look at that. What's going on? My computer. Wrong place. My full list, even with the sheepers. I thought I had Avalanche. 1 second. So I'm gonna show you our AVAX. Again, another layer 2 solution, trying to make Ethereum cheaper, which, something that's needed. So Avalanche is the fastest smart contract platform as measured by time, and has the most validators securing its activity of any proof of stake protocol. Is blazingly fast, low cost, and green. Again, the green part is what's going to drive a lot of blockchains moving forward. There's a lot of incentives to make your blockchain green or eco-friendly. So it's going to be a lot of proof of stake protocols like we were talking about before. So any smart contract enabled application can outperform its competition on Avalanche. So essentially, if you take your contract and put it on Avalanche, it's essentially guaranteeing that it'll be faster than putting it on anywhere else. So solid thing to look at. It's seen a huge price boost. Last 30 days. Yeah, in the past 30 or so days, yeah, we were at $12. Peaked at a high of around $60. So yeah, solid project. Again, anything Web3, layer 3, it's going to have a nice little pump, but your objective as an investor is to figure out which project has the capability to actually get the job done. What team can actually get it done? Okay. So Avalanche, put that on your radar. I'll give you guys just price targets that I'm looking for on some of these projects. I'll drop it in the crypto group. But I'd imagine, just based off of what I'm seeing, anything under $40 would be a good buy. Maybe 30 bucks could be a good one. 30 and 40, I don't think it'll come all the way down to 20. And of course, if we get back to the floor, you know, pick some up. So yeah, Avalanche is a solid project. Let me go back for y'all. Definitely check out this Wasabi for sure. All right, VeChain. So I don't really talk about VeChain a lot, but I really like VeChain, and I always have for a while. So with VeChain, they're in the supply chain management side. So VeChain is a blockchain-enabled platform that is designed to enhance supply chain management processes. By utilizing tamper-proof and distributed ledger technology, VeChain provides retailers and consumers with the ability to determine the quality and authenticity of products that are bought. So ladies, y'all can stop purchasing fake bags. You could be more confident that a product is, actually authentic. One of the first things that they were running was with Walmart and kind of tracking produce, making sure that it was the real produce coming from the farms. I think they have a partnership with, I want to say it was Louboutin, but essentially what they're doing is putting supply chain data on blockchain, and you as the consumer, once you receive your product, you can scan a QR code, and you guys will probably already see this already. Scan a QR code and it'll give you the information about the papers about that bag or whatever you're buying. So that's they've positioned themselves to be the leaders in this, and yeah, I was been buying this thing since a tenth of a penny, and we're at 12 cents. So, and we're just kind of getting started. Things are just now kind of ramping up for VeChain. Shoot, it went as high as a quarter. I didn't even know that. That's great. Yeah. So we had a nice little pullback to 5 cents, but overall, it's a solid project. Long-term type of project as I see, and anything IoT, I'm down with it. So that's VeChain. Give you guys a couple more. Kusama is part of that Polkadot ecosystem. Let's talk about Kusama. Solid project. So Kusama is a public blockchain network that is running the exact same code base as Polkadot. I thought it was never mind. It is aimed to be a canary build for the, okay, so that's what it is. All right, so Kusama literally is a test net. It's live, but it's just basically running in live conditions like Polkadot is, so that it can test different things in a live condition without messing up the actual Polkadot ecosystem or platform. So yeah, so it's basically an experimental and development environment for new features that would eventually be deployed to Polkadot. Because of its experimental nature of Kusama, the development speed is much faster and has seen significant traction since 2019. So there are these parachain slots, right? So the Kusama network consists of multi-chain architecture. These chains, also called parachains, they're interconnected with each other within the network through leasing a slot on the relay chain. So in order for a chain to obtain a slot, projects will need to do a bid, via auction. And the parachain slot auction is conducted in order to allocate slots to the project. So essentially, there's like a limited number of spots to test your project on the Kusama parachain, pretty much. And projects have to bid in order to get that spot and get launched. So that gives the Kusama token utility because they got to bid in that Kusama token. And yeah, in order to raise enough KSM to secure a slot, projects may opt for a parachain loan offering to raise Kusama from the public. Like, so they'll give you, the slot or a loan for it if you, like the project, are willing to raise, more money from the public for it or whatever. So yeah, it gives Kusama utility, and who knows? It may be used as a actual live project and not just a test net, in the future. But either way, it's a $2 billion test project. That's the funny part of it all. So moving on, because I want to give y'all some solid ones. And this here, so this might make some people feel good about this, but I missed the pump on this. I still don't have any of this. So I'm in the same boat as y'all. I've been reading about quant like here and there, like it's been, whispered in my ear here and there for a while. And I never really gave it the time of day. And of course it does this. And this always this don't always happen, but like those be the ones that hurt. Like, damn, like somebody been telling me. It was like $7 in fucking September. Now it's at $200. Quant has a very large ecosystem full of different projects. So it's a London-based project set to revolutionize blockchain technology with the development of their blockchain operating system Overledger. The experienced team are determined to fulfill the original vision of the internet by creating an open, trusted network for people, machines, and data to operate securely and safely. They're literally trying to create the internet 3.0. Everyone has their own version of the internet overall, right? What it should be doing, what it shouldn't. So they're putting out their own. So this Overledger is the first interoperable blockchain operating system that facilitates internet scale development of decentralized multi-chain applications. So this is going to be crucial because again, this is a project that is offering a platform for other developers to develop their own decentralized multi-chain application. And multi-chain just simply means that, this project lies on multiple blockchains. It could be on the Ethereum blockchain or the Neo blockchain or Quant, like it's on multiple chains. So Overledger has the ability to unlock and distribute value and applications across current and future blockchains. It is agnostic platform. That's pretty cool. So here's one way this could be used. So it has the ability to unlock and distribute value and applications across current and future blockchains. You could literally set up your own personal trust fund in your ledger type of thing. If you pass away, or you set it for a time in the future that this will then distribute to your family members or create a whole brand new, blockchain or account or whatever, in order and, distribute to it. So it gives you a lot of flexibility to do things, or it gives developers too a lot of flexibility to do a lot of different things across different blockchains, which is important because one blockchain may have information about the real world housing market The other blockchain may have information about shit, I don't know, space or planets and stuff. And if you're a decentralized interface or project and you want to get data to compare, space data to housing market, you would want to be able to communicate to those other blockchains in order to do so. So this is very crucial to look for in the crypto space. And these projects are going to be the ones that, continue to pay. And like I said, no need to chase anything in a crypto space. Things are still primitive. There's still more money to be brought into the space. And when that money gets brought into the space, it's going to find its way to the solid projects and to the strong hands and strong teams, etc. So you, as an investor, your job is to do the same. You have to put your investor hat on and think like a, multi-billion-dollar corporation that's about to invest into different projects. Like, hey, is this really worth my money? And that's certainly how I approach it. So that's quant. Let's see. So we actually have a couple here, and I won't fully jump into them. I actually got to go eat dinner now. But yeah, we got quant. Waves is a solid project. Hedera Hashgraph. Helium have been busting crazy. Synthetics, Engine, Tailcoin. For a second, yeah, go ahead, Forrest. Which ones you want me to take a look at?
So there's this one that I heard about. It's called Prism,
Oh,
and
yeah.
it's real cheap right now. And the only reason I
while.
heard about it, they just got on this new. They're doing a blockchain of freaking community. I don't know, like a social networks site, and they're doing a collaboration with them. So it's like they're definitely getting noticed.
Okay.
It's called Prism, and I heard it's even artificially like set at the price it's at.
What do you mean by that?
Like they set the price of it artificially. Yeah, that's just what I heard. So like with the price you see, I think that's like a predetermined price, and like it's cheap now, and they can raise it if they wanted to.
That makes no sense. Price is based off of demand and supply. Like it's trading on a market.
Yeah.
So, I mean, I don't know how.
Yeah, it's far out. Like I would love you to check it out for me because I would like some answers too.
Like I feel like, is this the same prison project from a while ago? Hold on, I'm thinking out loud because
Yeah, it's some crazy stuff. Like the founders of it are Russian, and like one of them got kidnapped for the source code or something.
bro, what the fuck?
Yeah.
I yeah, this shit just looks pump and dumpy price wise. And yeah. Now, what were you saying? Like what? I mean,
Oh, I need some answers on it. Like they're like basically I heard that this is just off what I've like read is that it became like a legal tender in Russia, and like the only reason I know about it is like you stake through it through this app called Roy Club, and like basically it's like a proof of stake technology. So they give you like a predetermined amount every month if you just stake Prism, and so yeah, I just want to know if like this is even legit, if I should even put money into it because it's cheap now.
all right. So first thing first, you always want to do, right, when you click on the project, go to the GitHub. Okay. And
Yeah.
when you click on the GitHub, okay, you don't have to know how to read code or anything, but let me actually show you it as, another blockchain's GitHub. just for comparison. All right, so this is Solana's GitHub. Just on the overview page, you're able to see all the different what they call repositories, but it's just like folders or different things that they're working on. You can even see when it was last updated. Of course, too, you can see the list of developers that are working on the project. I always recommend y'all to follow these people on social media, especially LinkedIn and Twitter. They often tweet, updates and what they worked on, stuff like that. Little
Yeah.
things that will help you get into something, a pump earlier than others. But this is something that's being worked on. You see all the different repositories. There's 86 of them, different packages. I guess they won't show me that. You see that it's something that's being worked on. This is what I get with Prism. Just the Prism core repository and pretty much nothing else. And yeah, this is the same one from 2017. They actually didn't even rebrand. They just changed the color of their damn symbol. Because I remember this, but I'm like, I don't remember it being purple. So that's why I was looking at it. But yeah, so since 2017, this
It
is
hasn't been
all I
updated.
got. Nothing has been updated.
Yeah.
And even when I click into this, right, we have like where the main code and everything is at, right?
Yeah.
And
So
you can
I guess that
see,
desktop one is just a wallet. Prism desktop. I think that's just a wallet, and then I don't know what that first one is.
but even with a wallet, 3 years ago, it still has like crypto moves fast. So
Yeah,
like
they should
yeah,
have had
it
something.
having some type of update, and you don't want to use a wallet that hasn't been updated for 3 years. Would you even use your phone if it hasn't been updated for 3 years? Like
No.
shit
Oh
probably
yeah,
wouldn't
yeah,
even work.
yeah. So this is GitHub. Oh yeah, dang.
Yeah. So
I didn't even look on GitHub.
yeah, that's always my first stop because again, I'm following, um, development. So I want to see people working on a damn code because crypto is code. That's it. Like it's not an actual coin. The only thing is these protocols, right? The protocol is the code. That's the real value. Just like if you buy a car, right? You can actually touch it. It's tangible, right? It's a real car. And even if it doesn't work as a car anymore, you could scrap it, sell it, do something else with it, right?
Yeah.
Crypto is just code. That's the only value that's there. And it's blockchain, right? The security of the network, but that's something totally different. But you first have to start with a solid code. That code has to be audited. It has to be worked on, stuff like that. You hear about these different hacks and shit like that. It's
Exploits.
exploits, it's vulnerabilities in the codes. Um, so with this one, I wouldn't just from my quick look at,
Assessment. Yeah, they even
just
say that the price control and that it's gonna rise, but it's like, bro, like I don't know why they're hyping it. Like I don't know why certain people hype themselves up so much. You know?
yeah. And this website is so basic, it's not even funny. Oh, sorry. So if I look at the code on the website, yeah, they didn't even code this. This seems like it's it's just a template because you can see all of the different components within the template. So yeah, and I mean, it's not really a bad thing, but shit, if you guys are really developing some shit here, like you could at least make your own website. Um, but this from Rip, this looks real basic, and that's probably why like I probably didn't even fully do full research on this because I'm like I remember Prism, but why the hell? And I think I had some too. That's why I was asking, like off of like an airdrop or something. And I was like, what the hell is this? But never fully followed through with it. And This is probably why. So yeah, well, from me, I would say no. Now, again, that does not mean the price won't go up, because there's people out there that just buy shit just for the hell of it. Um, so like, if you still gonna throw money into it, approach it properly. And why would you? Like, look at these percentages. Like, let me look at the volume. Bruh, it's not even doing $500,000 in volume, trading volume. Meanwhile, like I said, I'll show you comparisons. Um, and I know it's a low cap coin or whatever, but let's take Dogecoin. I mean, shit. Look at the trading volume on Dogecoin, $1 billion, right? In comparison to, um, you know, not even 500,000. The whole price thing, there may be price manipulation, but you can't really control the price of a crypto per se, unless you own that exchange, or because you got to understand that what makes a price is just what the next man is willing to pay for it. So I don't understand that aspect, but I'll take a little bit deeper dive, but I can already tell you now that this is crap.
Yeah, no, that's what I thought. I was like, no way is this like. I did a quick search like that. I just didn't look on GitHub, and that's like a big indicator right there. Like,
Yeah, and
if there's no development, then why would you invest in anything?
yeah, and what is this? So from August, so yesterday, we're pleased to welcome President. What? Prism is working on letting users record on-chain messages and changes in their account balances. What, on their platform, Blockster? Again, they're not doing shit. I don't even know what Blockster is. It might be from that side of the world. Um, and another good place to get updates on a particular project is their Medium, right? These motherfuckers don't even
Oh
have a
yeah,
Medium.
yeah. Medium.
They don't
Medium's
even
good.
have a Medium. Yeah, all major projects drop updates on their mediums, or different community shits. I guess the Dogecoin one don't have it, um, but it's on BitcoinTalk.org. Yeah, these these were the days. This is how people used to talk back in the days, and about crypto, just forums and shit. Um, but yeah, I don't think this one is a good one.
That ain't it. Yeah.
But all right, y'all. I'm going to have another call tomorrow. It's going to be in the morning. I haven't figured out a time because I do have to uh, drop off a vehicle for my other business. But I will let you guys know in the chat uh, when we're gonna have that call. What time? It's gonna be in the mornings, probably 9 or 10. I'll let y'all know. But other than that, make sure that everyone, like, especially if you don't have a wallet, download your wallets so y'all can get prepped. Um, I'm seeing the markets kind of turning a bit, so like things are about to pump again. You might want to, start taking your positions or whatever. And I'll also show you guys like how we can trade these altcoins with leverage, like how we be doing on MT4, but do it on these different platforms like Binance or Bybit, and be able to leverage trade it that way. But again, I don't like trading them like that. But for some of these altcoins that move so fast and super volatile, there's some good setups that are on there. Yes, I do use KuCoin. Matter of fact, KuCoin is becoming Oh, that's a shoot. KuCoin shares. Um, KuCoin is becoming a really nice platform, especially with all the BS that Binance is doing all over the world. Um, yeah, they do have a KuCoin shares. I kind of fucked up. I sold like a majority of this at like $2, like right before it pumped, and I'm like, what the fuck? Yeah, so I sold like right here, and it pumped, and I was like, what the hell? So I just held what I had, and it just continued pumping its way. Because KuCoin is starting to offer a lot of different products, financial products. Um, NFTs and just different things that make the KuCoin share token um, useful and has a use case overall. So yeah, KuCoin shares solid. This could be another um, Binance token. Um, yeah, he said. I don't remember what Binance. Yeah, I got into BNB at $8. Um, I sold again some of it at like 25, and then I had probably like 10 or 12 of them left, and then the shit just shot up to like 2, 3, 400. And I was like, damn, I could have made a lot more money off of that, but not to fret. Profit is profit. Uh, yeah, KuCoin shares solid platform coin, and it's a solid platform too because they have like I used to use um, Binance back in the day because it had all of the altcoins you can imagine, like every little altcoin and then some. KuCoin is starting to become that. So most of the coins that you can find, obviously you're gonna search the coin first and then go to markets and then you could see where it's at. But uh, there's a lot of coins that may just be on a decentralized exchange like Uniswap, but I don't want to spend the Ethereum gas fees. So I might find it on KuCoin for a whole lot cheaper fee wise and be able to make that purchase. But majority of pretty much all the coins that I gave y'all today, it's on KuCoin. Uh, I may not be able to get into this, but any questions? Oh, and there's $60. I love finding money in wallets. Any questions before I did? What's actually in there? Oh, got some ocean and some Telcoin in this motherfucker. I gotta get into my other wallet and see what's in that. Do y'all have any questions before I go? I just wanted y'all to get on the same page type of thing. I'll answer that in a few. No questions. So for just to give you an update or outlook for tomorrow, have like your wallets and stuff ready. I've given you guys a few coins or whatever that I'll be looking at, but I'm also show you guys like how to purchase some of these coins. And of course, like if you guys have need any assistance in any other type of way, like you don't know how to do something, put the question in the in the chats and stuff like that. That way, I know what to go over and to cover. But other than that, I appreciate y'all rocking with me and learning about this. And I will, if I don't have any other questions, Mahala at y'all in the chats. And of course, see y'all tomorrow. So we could get back at it and start getting these crypto projects down pat. Yeah, because there's a lot more that I want to share with you guys. That's in the works. Projects that are working with um, real world companies There's alliances that are being created with these big companies that on the surface, they're saying, fuck crypto, XYZ. Meanwhile, they've been developing with crypto projects for mad long. All right. So, yeah, get on this, do your research, and I'ma holla at y'all tomorrow, bright and early. I'ma drop the link in there. Let's take a quick look at the markets. We ain't even really do nothing. I do expect us to, this little double top here, have some type of pullback of some sorts. But we're looking a little bullish, nice low volume. Let's take a quick look at ETH. Yeah, I kind of expected this from ETH. This little sideways choppiness. I drew this like weeks ago, and we kind of been doing just that, going sideways. And on the small frame, it looks like it's big moves that are happening, but just zoom out and realize that you're not really going anywhere. You're just going sideways. Until we break these tops and make a move, we're not getting there. So I have still in this trade here. Just I haven't been in any drawdown, but it's been a boring ass trade. But it's cool. I mean, it's gonna pop whenever it pops, and once it does, I'll profit. No need to worry. And I think there's 4-to-1 risk to reward ratio back to the all-time high. So I'm gonna leave y'all with that. Everything looks kind of solid. I think we might bounce within here a little bit more, but everything looks a little bit pumpish. So even with XRP, again, the fib level that I was showing y'all earlier, I got into this trade on Wednesday, I want to say. And my target was right to the fib, and we touched right on it, got the nice bounce. And I didn't take the buy on this because I didn't want to over leverage myself. I was already in a trade, but this was a perfect setup. Played out to a T. Because again, we got this pump, and again, just take my fibs, and the targets I'm looking at for those entries is that 618, 66, and I can go ahead and throw on that 1.618 on there, and this is my target. Right. Even if I set up this trade right here, even if I set it up like this, again, my stop loss is never an arbitrary number. It's always based off of structure. So if we break below my 618, I'll just consider that movement, that structure invalid. And I'll take my TP right under for, 3, almost 4-to-1, 4-to-1 trade. But yeah, that's it. Like you have to set up plans like this just so that you're not just caught, off guard, or you're not just jumping in and out of trades. Because I remember when I first started trading or calculating and measuring my trades, over 80% of my trades was that I lost was due to me doing some fuck shit, hopping out the trade, looking at the 1 minute chart, shit like that, like hopping out earlier than I needed to. And the trade actually went the route that it was supposed to go. So just be patient, plan out your trades, let them rock. If you lose, that's figure out what happened, right? Figure out, hey, what did I miss on, or what ended up happening that caused it, to break that structure. And that's how you end up learning. So we'll see how things go, and yeah, y'all have a good evening. I'll catch y'all in the chats. All right.